Crypto is under full-blown attack today, and TradFi is the culprit. We're going to break it down with you guys with a special guest that's going to break all of this into bite-sized nuggets that you guys will understand. Very easy to get going. I do want to thank our sponsor, and that is iTrust Capital, where you guys can get into a crypto IRA. And one of the ways you can do that is use our link down below. It's going to get you into crypto, gold, silver, pretty much anything you want in terms of digital assets, all within your crypto IRA account. So use our link. Get a $100 funding reward just to get started. Listen, I wanted to bring in Chris Perkins, who has been on our show before, specifically for what's going on in the CME today, and we'll break it all down. But Chris, welcome back into the show.
Paul, amazing to be here. Good to see you.
First of all, your background, a little bit to the issue that we're seeing right now between the CME and the CFTC, which we'll explain. Give me a background of what your involvement has been in this area.
Yeah, so if you paid close attention to what Terry Duffy was talking about, he said, look, for these perpetuals, they're really not futures, they're swaps. And what the heck does this mean? It actually means a lot. And to really understand, you have to go back to Lehman Brothers. You have to go back to the global financial crisis. And after the world blew up, and I actually happened to be on the floor of Lehman Brothers, in 2009, the G20 got together and they said, guys, enough of these derivatives, these swaps that you guys are trading. We're going to make sure that you're going to electronically execute them, report them, and you're going to centrally clear them. And we're going to force you to hold a lot of collateral against them. And then all the governments went home and they started spitting out laws. And in our country, we had something called Dodd-Frank that many of you have heard about. And Dodd-Frank and various regulations were put forth. Gary Gensler came on the scene when he was chairman of the CFTC. Commodities Exchange Act started governing these things we call swaps. How are they different than futures? Well, they're a different product, but they're regulated by the CFTC. They have required collateralization standards, which are higher. So if you have a cleared swap, you have to hold 5 days of margin. And we can talk about what this means. Futures are usually 1 to 2 days. And there's also confidence intervals, like in swaps, it's 99%. So long story short, if you have a swap, you have to hold higher collateral.
Okay.
So what does this mean? Why is Terry saying this? He's saying it because if perpetuals, and the CFTC's come out and said that these are futures, futures have the ability for more leverage. They're more easily accessed by retail, whereas swaps have higher margin, lower leverage, generally speaking, more difficult for retail to enter the space. The entirety of what he's trying to do is increase the margin, lower the leverage to make it less appealing for market participants onshore. What would this mean? Perps would stay offshore. He would still enjoy, his business onshore, without the challenge of perpetuals per se.
Which is what, of course, Mr. Duffy has done, and that is CME now has set up to sue the CFTC over this very issue. This is Terry Duffy talking about it. Let's go to that.
What do you want to accomplish with the lawsuit, Terry?
These products that he supposedly approved as futures are not futures. They would be swaps. And if they're swaps, Melissa, as you know, there's different requirements in order to participate in the swap market, such as 5-day margin, such as swap requirements for the users to register as swap dealers.
So, Terry, I get calls, I get Twitter. This perp thing scared Terry. He's going to retire because of it. And my response to them is, my instincts suggest that this was planned in the fall of last year. It's probably when you started talking about this. Speak to the genesis of this and sort of quell any concerns.
I almost backed out of putting this release out this morning when I did hear after I heard those calls, because if you know me, I'm always up for a good battle. I've never shied away from one. And I won't shy away from this. I've been working on this plan with my board for 8 months. But to say that I'm concerned about what's going on right now is laughable at best. And I think anybody who knows me knows that I do not back away from anything.
All right, so that being the outgoing CEO of CME, do you know Lynn, the incoming CEO? Would her position be very similar to what Duffy's position is?
I don't know Lynn as well. I know Terry Duffy. I testified in Congress with Terry Duffy. I think he was very concerned then, and I think he's very concerned now.
Yeah.
When we testified in front of Congress, he did the same thing back then that he's doing now. And what he's trying to do is he's trying to perpetuate a regulatory moat that really departs from innovation, departs from the principles that the CFTC and Chairman Selig are trying to uphold. And like, you have to ask a question, like, why do we have a 5-day margin for swaps? And why is that such a big regulatory moat? Well, think about it. In the past, I used to run the largest clearing member in the entire world. There would be big changes in the market, and we could only collateralize when the markets were open. So if you went into a long weekend, you would have to stack 3 days of margin just to, with the data buffer. So like, would it make sense to have 5? Well, maybe. But perps really collateralize quite regularly. We can collateralize in near real time with blockchain technology. And so one of the great unlocks with blockchain technology and faster settlement is what we call capital efficiency, because I shouldn't have to hold 5 days of margin. If my markets are open, I can collateralize much more regularly. So essentially, it should save users, including retail, capital. And if you don't have to pay as much capital because the market is balanced, that makes sense. And that really is how you cultivate better derivatives markets, where you're not locking up capital for no particular reason because the technology unlocks it. I think the CME is very concerned. And what are its competitors doing? Well, I saw Eurex make an announcement with Kraken. I saw ICE make an announcement with OKX. They're picking dance partners. They're taking different approaches. But like, what I hope happens is I hope we get back to principles. And those are the markets that I understand. And having worked in CFTC-led markets for well over a decade, and what are those principles? Capital efficiency, user protections, and setting the tone for deep liquid markets and helping innovators. So like,
wouldn't that
I think
be
this
great?
Wouldn't
that be great?
That'd be lovely. I know how the story's going to end. We will wake up one day and perpetuals are going to be part of our market structure, the fabric of our derivatives markets. It's very uncomfortable being disrupted. But in time, I think this is going to be part of the fabric of our derivatives markets.
Okay. All right. So I like the optimism there, right, in terms of where this could go, Chris. I want to play another clip because this looks like this could go into kind of a knockdown, drag out. Take a look.
There's a lot of, I would say, misrepresentation of certain facts.
Do you think the CFTC is misrepresenting certain facts?
I do. They said on your show last week that they created a rule around 24/7. They did not create a rule around 24/7. There's a handful of things that the chairman has said, his own words, that are just not true. I think there's a lot of problems here. So yes, I do.
All right. So, I mean, those are pretty strong words coming from Duffy going against Mike Selig, obviously over at the CFTC. Selig is not one that backs down from this either, so he's going to be in a position that really starts to put a little bit of pressure on this. My question is, do you think this could in some way finagle how they could ban Hyperliquid or get to that point where we would see those kind of restrictions?
Well, Hyperliquid is currently, quote, banned from U.S. persons.
But I'm talking about if this goes, if we get on the good side of it getting through.
If this goes, like, I think people like Hyperliquid, TradeXYZ, these are very sharp, sophisticated operators. And I think they're all thinking about how they can compliantly work to open up U.S. markets. If you run any business, you want access to the largest market, the best market in the world, the deepest market. So I think they're all coming up. And look, at the end of the day, once you understand the rules, you can build businesses around them. I really commend the CFTC and the SEC, for that matter, for providing transparency that allows these companies to operate. SEC side, if it used to be a securities, a death sentence, now there's going to be paths to actually trade. Look what they're doing with Reg NMS. Pretty amazing stuff. CFTC is the same. Like, they are being very thoughtful here. They're trying to make things right. I envision a world where Hyperliquid, there is a compliant path for U.S. persons to trade on Hyperliquid. I do think that's going to be part of the future. Maybe not there yet. And the fact is that a lot of the technology does not reconcile with the hyper-centralization that was forced by Dodd-Frank. Again, the world blew up. We didn't have technology. We didn't know what to do. So we said, you know what, guys, we're centralizing everything. We're putting a lot of capital into that bucket, and that's how we're going to manage risk. And it's generally worked. But that's not the only way. And that's what blockchain technology does. And so now it's time to go back to those principles and think about how we can create the best markets for our people. And that's what I think Chairman Selig's doing.
Yeah. Yeah. Well, when you look at the threat that the competition is posing right now, I was surprised at these numbers. This is talking about the situation with the CME. 99% of the company's dominance of this business has given it solid pricing power, roughly 57% in terms of profit margin, comparable to what we've seen in terms of the Intercontinental Exchange, ICE, and the CBOE global markets, which all have about a 24 to 21. Those are normal margins, you would think. How are they able to control that kind of, this is crazy to have those kinds of margins in these markets right now.
Like I said, we centralized all derivatives activity really post Dodd-Frank. And if you are one of those central counterparties that was able to control market, you win. I'll remind people, derivatives are the battleground. Derivatives are what makes markets go around. Spot trading is even worse. If you look at spot trading, not a lucrative market, whether that's equities or FX or anything else. The money is in derivatives. There's a reason why ICE bought NYSE and NYSE didn't buy ICE. This is very, very important. People, get obsessed with NYSE this, NYSE that. The profitability is in derivatives. It is going to be a battle. As you go into the courts, you don't know what ends up happening. It could go in either direction. But I do have confidence in the direction of travel. I think our leadership of the CFTC has got their act together, and they're going to do the right thing.
The CME located in Chicago. You have the crypto industry now pushing back against Pritzker, who signed a 2% digital asset tax. This seems awful close and connected to the boys in Chicago now with all this happening. I mean, is there a conspiracy? Is there something here that we need to be paying attention to what's going on in Chicago?
So ironic, the bedfellows that are here. I've seen a lot of, Terry is a known Republican, and a lot of Democrats are aligning with him. And so it's just, I think it's less of a political thing. I think it's more of a self-interest type of, but it's creating really interesting bedfellows. Saw some of Gensler's staff last night tweeting their support of Terry Duffy, which I would have never imagined in a million years. But the stakes are very high, and it's very interesting.
Chris, I want to get your opinion on this. The Federal Reserve came in and says requesting comment on a proposal to require certain payment stablecoins issuers to maintain basically KYC is what they're talking about. I'm curious where this would be implemented. If you were thinking this through in terms of a proposal, how would this be even done? I mean, because most of the time these KYCs, if you're already within an exchange, a regulated exchange, or in a bank at some point is going to use this, you already have KYC. So they can only assume, I'm only assuming, that this is going to go into the regular markets like self-custody. What do you think?
I haven't spent too much time. It's a notice of potential rulemaking, so we don't know exactly how the sausage making will play out. Look, I think in the crypto age, what's important is that entities and individuals are accountable for their actions, right? And so if you are an issuer and you issue a stable coin, do you have to KYC that person? I think the rule is yes, you do. But then as those transactions go through the internet, if I don't know, when you go and you go shopping, Paul, do you KYC the people that you pay at the local merchant? No, I don't think you do. You give them cash or your credit card, and that's it. And so I think it's important that the behaviors of people are policed. Like if someone is there, conducting money laundering or giving money to a sanctioned entity, they should absolutely be held accountable. And we've got great analytics to do that. But forcing unnecessary KYC, I think, does kind of get in the way of a lot of the innovations that we're bringing to bear.
Yeah, obviously, fiat not necessarily under the same guidelines, even though there are somewhat controls. But I can go in and pay anybody, whether it's on the open market, the black market, the gray market, doesn't really matter. This, of course, eliminates the advantage of stablecoins, which has been speed and what was thought as pure freedom. In terms of just like a fiat dollar.
Think about it. If you or I, let's just pretend stable coins were the norm and everyone transacted in stable coins. They were all on chain and you had this benefit of a real-time settlement that we know and love. What if that was the norm? And then you and I got together one day and we're like, dude, I have this amazing invention. We're going to put money on paper and we can give it to each other and no one's going to be able to follow it. If we were to present that to our policymakers today, they would not be very happy. But for some reason, we have it backwards in certain cases.
All right, so I hear where you're coming from. I'm more of a privacy maxi in the sense of there's no reason for the government to continue to kind of impede into, I think, private matters of an average American. And of course, stablecoins could essentially be plugged into almost like a CBDC, which has been the concern I've always had, is that at some point, if they can claw back, if they just don't, because you know the slippery slope that this can go into very quickly. I've been debanked before. I know what that's like. It doesn't feel so good. And if that is where we're heading with these, that would concern me a little bit, Chris, for sure.
Yeah, that's fair. And I know exactly how you feel, been in your shoes. And the fact is that the programmability as well makes it particularly concerning. If you're a big country that has a wallet and a CBDC and you have a social score, you can actually very easily program that social score into the wallet and burn tokens or currency to the extent that the government doesn't like it. Like, that is very feasible. And so the good news about stablecoins is that you have due process. And freeze and seize is a part of the national security apparatus. We did seize a bunch of stablecoins from the Iranians during the conflict. But there's a due process that you have to go through. And hopefully we retain due process in this country. But you're right. CBDCs can become a very slippery slope depending on who's in office or which country you're in.
Yeah, exactly. Hey, I want to jump over to what's happening with Bitcoin and the king of Bitcoin right now, which is MicroStrategy. I am looking at the stretch chart right there. This is an absolute mind reset of what's happening with the stretch asset. And this has been one that's been out there for quite a while. Obviously, if you guys know a little bit about it, it's a variable rate product from MicroStrategy, which was kind of promised as almost like a money market. The risk level, I felt, was never really laid out to this level that we're seeing right now. And if you look at what's been happening here recently, here's Kruger talking about it. You sell 32 Bitcoin, the price of MicroStrategy goes from 160 to 116. You crash stretch from 100 now down to 82. And the MNAV, of course, starts to drop. Was it really worth it, or was it strategic? What do you make of this right now, and how would it affect Bitcoin in general?
Yeah, it's a difficult spot right now. I think, narrative is so important in crypto. And one of the things about Bitcoin is that there's a lot of social consensus on it as a store of value. There's also been this ongoing social consensus that Saylor is going to be buying forever and no matter what. But at the end of the day, when you really understand Bitcoin, the beauty of it is that it's decentralized. And for people to focus on this one centralized entity is driving the real price action. That's unfortunate. Bitcoin is also very responsive to rates. And I think Kevin Warsh, maybe yesterday when he came out and in some of his press conference, people were a little bit concerned about the direction of rates. Frankly, I think Kevin Warsh is going to be very good for crypto. I think he likes crypto, and I don't think he's going to be jacking rates to extremes. And I think he's going to be very favorable as he works with Besson on a new Fed Treasury Accord. So there's a confluence of factors that could be suppressing price. That said, I think as the Iranian issue seems to stabilize, inflation comes down, macro improves, I think long term, I think it's very constructive. So, yes, near term, there's going to be some noise, and I think the Saylor's in a tough spot. But if Bitcoin rallies, I think a lot of his problems go away, and I think long term, I feel very constructive.
Well, with that, because this is my kind of thinking. You look at, the timing is very interesting here. At the same time, you have BlackRock rolling out, and they roll out BITA. Let me play a clip for you, and then because this will kind of frame it a little bit. Let's go there.
And so we've had lots of clients who've maybe been open to Bitcoin, but they've been hesitant. Institutions like pension funds or insurers, others who are very yield focused, and Bitcoin doesn't intrinsically pay a yield. And that's been maybe the primary objection to not allocating to Bitcoin. So what this does is enables that generation of yield and also dampens the volatility a little bit. If Bitcoin goes down, BITA would be expected to outperform IBIT or Bitcoin. If Bitcoin's flat, same thing. If Bitcoin's up modestly, again, we'd expect BITA to outperform. It's when Bitcoin is up significantly that actually we would expect it to net underperform. But we're talking, 50, 60, 100% type returns before you start to get that turnover point where actually you'd have rather been in Bitcoin or IBIT. And I think a lot of investors, if that happens, will probably be pretty happy regardless.
Is this product maybe an indicator as to how BlackRock is thinking the market might be for the next little while?
No, I wouldn't interpret it that way. We've had this in the works for quite some time.
I mean, this seems like it's just time feels too close to what's going on in the market and, of course, what strategy is facing right now. Then, Chris, you have this right here, which is where CNBC, which has been very pro Saylor in the past, kind of flipped the script a little bit. Let me play that clip.
Let's go to Bitcoin, because you've been an enthusiast. You've been right for a long time. What's different, in my opinion, is the bullseye on MicroStrategy strategies back in terms of their holdings and their average price. Mm-hmm. Where do you sort of start to get concerned when you can see the predatory nature of the market start to kick in?
Well, I mean, listen, I'm concerned. I've been humbled by life and I've been humbled by markets. A lot has happened to me since the last time I showed up on this desk. And this has been a shallow cycle for Bitcoin. But I think we've been buffered by the institutional buying at the ETF level. So, is Michael in trouble? He's definitely not in trouble. You have to really understand the mechanisms of the balance sheet to understand that Bitcoin can go a lot lower, and he's virtually not in trouble. He also bought back some of these converts recently, which takes that piece of it off the table. That was something that he was probably a little bit worried about.
Obviously, CNBC saying, hey, there's a bullseye here, so it does. You're not really worried about this, though, Chris. You don't see this being a problem for MicroStrategy in the near future.
I mean, I don't like talking about individual equities or companies. And yes, Michael has to figure out his way out of here. But I think my point is that when you step back and you look at fundamentals across the crypto asset class, institutions are coming into the space. And with Bitcoin, there's 21 million coins. That's all there's ever going to be. And I do think that as time goes by, those institutions continue to march forward. BlackRock came up with an interesting product, covered call strategy on their ETF, trying to generate yield. I think you're going to see more and more innovation in this space as institutions and their sophistication and their capital come in. So I remain long-term very constructive about the asset class. It's a tough market to trade. It's always been a tough market to trade. There's volatility always on the horizon. That could be down. It can be up. Remember, volatility works in both directions. I think to get Michael Saylor out of this conundrum, I think you need positive price action, and that can come in many different forms. And I guess we'll have to wait and see.
I've got a clip of Saylor talking about that in terms of what he thinks is happening.
So after there's nothing to worry about, we invented an imaginary problem to worry about. Imagine a computer that no one's ever built. Let's imagine that perhaps we make a scientific breakthrough and we manage to create a quantum computer. And let's imagine that it cracks our current cryptography. Then let's imagine bad things happening. It's a hypothetical problem that people imagine so that they can generate engagement on X. A, there are no real problems. And B, we're in a bear market and the price is low. It's like all their blood sugars crash.
Which is very interesting. You've got a number of different technologies coming online, quantum, AI, and crypto. These things are all working together, and I think they're actually going to make the entirety of the industry much stronger. AI right now has been uncovering some vulnerabilities in certain cases.
Sure.
And, people are freaking out. They're like, oh my gosh, I'm going to get hacked. But guess what? Once those vulnerabilities are closed, that's it. And yes, you may see some social engineering coming in the future and be new vectors of attack. But the bottom line is that AI is actually going to be helping crypto by making it even more robust. Quantum as well will enhance cryptography. And so rather than look at these things as threats, they're also massive opportunities.
Yeah, well, I agree with those to a certain extent. Obviously, we don't know what we don't know yet in terms of where AI is going to truly end up in 12 months or 18 months. I agree with you. I think the advancements that we'll see, especially if you look at the early stages of what Mythos has been able to do in uncovering certain threats. But listen, we're in early stage here, guys. A lot of tech is hitting the market, like you kind of mentioned, all at the same time. I don't think we've ever had a time like this in the history of anything I've ever seen. I want to go to a lightning round with you. My first one is this one right here. TradFi monopolies forced to support anti-privacy policies. Crypto will double down on privacy. Do you think that would be the case?
100%. Yes, true.
Yeah. Okay. So we're on the same page there for sure. Let's go on to this. Crypto market epic crash on July 4th if we don't get a clarity, which looks like it might not make it by 4th of July.
No, we're going to be just fine.
No, I'm going to stand in the middle there. I'm a little concerned about July 4th. If strategy MNAV collapses, Schiff's reputation gets replenished.
I don't think so.
I'm in your camp on that one. I think Schiff has done too much damage to the crypto market. CME will weaponize government to go after Hyperliquid. They'd have to win against the CFTC first, right?
No, I mean, there's plenty of ways to go after Hyperliquid. You're starting to hear the national security thing come up. I think that there's definitely a lot of incumbents that are very excited to go after Hyperliquid.
Okay, well, there you go. It's coming. What happens if Saylor's supporters turn on him? Would they move to leverage self-custody, or do you think they'd move over to another product like BlackRock's?
Probably BlackRock. I think a lot of these guys are retail. They're less they're less crypto native, I think, in many cases.
Yeah,
so I think
which is why I don't think they would go.
Or there are other exciting companies out there too besides BlackRock. I'm just saying.
You look at Brian Armstrong. He's been going back and forth against Jamie Dimon. Do you think he responded well to Dimon? Dimon went at him pretty hard, but Brian kind of let him off the hook.
I'm going to stay in the middle of this one. I think it's ongoing. I think this is very similar to what you're seeing with the Terry Duffy issue.
Yes.
Incumbents don't like disruption. I think Brian is I don't want to say there'll be opportunities for those companies to partner. They already do partner, but I think holistically, there's some competition and disruption on the horizon, so it's uncomfortable.
Yeah, uncomfortable. If Morpho reduced inflation unlocks to zero, would it be an institutional darling?
So they've done some, interesting integrations with some institutions. I think Vaults and the tech that they offer is interesting to institutions. So I'd say I'm very favorable of the utility of Vaults, like whether it's Aveda, Morpho, et cetera.
You're going to be leading Vaults over with Franklin Templeton. So what's that going to look like if we see Vaults continue to get very popular here?
I think it's a super interesting technology where you can offer folks pretty interesting yield solutions, transparency around risk management.
Yeah.
The key to Vaults, frankly, is when no one's talking about them, right?
Exactly.
Yes. When I'm offering a strategy, I don't talk about, I've got this amazing internet that I use and I have this incredible PMS. If people don't care about the PMS that I use or the OMS or like the tech that I use to offer those strategies, they care about the strategy. And so Vaults will be successful when we don't talk about them anymore.
All right, you've got SpaceX IPO, huge advantage for Solana and Hyperliquid, which was worth millions. And, the kind of volume that I saw, it was unbelievable here.
Pre-IPO markets are a big deal. I think they're finally democratizing access to these markets for retail, which I love. So I hope to see more of them. I think it was great for all the products that were successful on the pre-IPO.
What if Binance wasn't banned in the U.S.? Do you think they'd be just taking Coinbase's lunch money?
Not necessarily. When you look at exchanges around the world, typically you see a lot of national champions. So it's not often that you see that. I don't think they would be crushing Coinbase on shore. Do you?
Here's another one. I do. I think they would be. I think they're in a position where they would strategically do better in DC. I think they would also be more creative on the kind of products and faster to market, which is, the concern. Had Coinbase gone with just speed to market to kind of keep up with what's going on with Hyperliquid and, just in general, what we've seen in the Perps market, I think they would have been doing much better. I've been kind of disappointed at the innovation that's coming out of Coinbase, personally, when I look at just the products and services that they're launching. I get it that they have to be slow and cautious, but in this market, I think it pays to be a little bit more risky while you can be.
What prevents Coinbase from becoming a deployer on Hyperliquid?
Nothing. That would be a fantastic, a good example right there. That in itself would be where I would change my position. Let's go over to this one right here. I think this is the last one. Warsh. Uncertainty will only power Polymarket. What do you think?
Probably I'd throw Kalshi in there as well. That's going to be an interesting battle, but I think Warsh is actually going to be very good for crypto, and I think crypto markets got him wrong.
Okay, that's a big one, big takeaway. So you feel, all right, so to your point, if you think he's going to be good for crypto in general, he had three major points he was getting out there. They're going to look at new data. We're obviously going to see probably less of him, because they're going to get much more selective on coming to market with news. And then you have this new strategy around what they're going to do to be able to decipher it. And even I think they incorporated sentiment even as a forward-looking or as a decision factor going into the market. Do you like all of those moves that they announced yesterday?
He's had to project a few things for various reasons, but I think holistically he's very bullish about the asset class. I think he's very close to Secretary of Treasury Bessent, and I think you're going to see it. While you can still have independence, you can also have cooperation. And I think both of these guys are aligned to create the best economic conditions. I think they're going to be focusing on inflation. I personally think inflation is relatively transient based on some of the action that we've seen overseas. It's like oil's coming down pretty precipitously. So I do think over his tenure, you're going to see it, like all things being equal, you can't control like macro in the markets, fully, but I do think that he's going to take the right steps to be more beneficial for crypto, particularly with his coordination with Treasury than the market expects.
There you have it. Listen, Chris, it's been great having you on again. Thank you so much. We'll definitely have you back, especially as things heat up into clarity, possibly what's going to happen with the Fed around inflation, which could be happening in the next few months. So thanks for coming in.
Good to see you, Paul. Thank you.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.